will not increase its offer to acquire Anadarko. Company says that it's going to take that $1 billion cash termination fee, the breakup fee, and walk away with it. Some comments on this. They say winning doesn't mean winning at any cost, and they will not dilute returns or erode shareholder value just for the sake of doing a deal. Probably the smart play on this. A lot of people said, and obviously you can see that's kind of what's playing out in the stock market right now. Chevron shareholders liking this. That stock is up by about 3%, increase of $3.50 to $121.01. I can't say this comes as a surprise after Michael Worth told us on our air, the chairman and CEO of Chevron, that he would not bid higher. He's relatively new in his tenure, probably wants to make sure that he sticks with his credibility on this, and he gets $1 billion to get paid to walk away. Not a bad deal.
He's an engineer, too. Yeah. He doesn't maybe get caught up quite with the financial engineering side of things.
The animal spirits.
Financial engineering instead of the
animal spirit side of things and chasing after it. Occidental Petroleum shares now down by 4.1%. Anadarko shares down by 1.8%. And that's a little bit interesting, too, Mike, the idea that Occidental shares are trading down even more than Anadarko's on this.
Yeah, I mean, the street didn't love the idea that Occidental was going to, go to any length necessarily to get this company. Not surprising Chevron. I think from Chevron's point of view, it's so much bigger. Right. This was not going to be any kind of transformative deal. It was going to be a nice to have, not something worth burning capital for.
Wait, why are Occidental shares down so much when it looks like the guy who they might be bidding against is stepping out?
I mean, because they're going to get it at the high price on the table.
Isn't now this the natural progression in terms of how the ARB?
In terms of the ARB?
We'll set this up because they couldn't really set it up properly in advance of this.
That's right. So, it wasn't a pure ARB before this because it was too many players in there. That's true. I'm not sure that accounts for down 4%. It could, because there is a big cash component in Occidental, right? So it's not like it's pure short the stock and buy the other stock necessarily.
Again, Chevron,
I mean, there had to be some probability that Chevron was going to win this, and then Occidental all of a sudden has a bunch more capital and is not going to pay a very high, perceived high price.
Look, there's still a question of how quickly they're going to be able to sell some of these other assets and everything else.
Yeah. Faber's here. Faber, this is, I mean, it's not up to you, but is it a smart move for Chevron, do you think, at this point?
Listen, I mean, you guys have said it. We sort of talked about it early after Vicki Hollub, of course, Occidental CEO, came public with that bid at 76. Price discipline, first-year CEO, or roughly wanting to show that. What I'm told is he had a line in his mind in terms of return parameters he was willing to live with, and this crossed the line. And that has been relatively consistent, at least of what I've been hearing out of the Chevron camp. That said, I certainly think they gave this a long, hard look in terms of what they were willing to do. It was not transformational for them the same way, of course, it would be and will be for Occidental, the Anadarko purchase. Interesting, and Mike, you could speak to this. I think not that long ago, I'm told, energy was about 14% of the S&P. Now it's about 5%. Yeah. And the reason is because they destroyed so much capital along the way. And so Mike Worth seems to be wanting to sort of go in a different direction, so to speak, in terms of where the industry has, at least, and not destroy capital and not put it to work where it's not going to get decent returns. So they bow out here. A big victory, certainly, for Occidental, no doubt about that.
Big victory until you see their shares
showing
down 3.5%.
all along how aggressive she was willing to be, of course,
well, we should
in terms
note,
of everything she was willing to do.
David, as you've been speaking, Occidental's stock has actually increased. I mean, it's gotten a little bit of a better situation. It's firmed up. We'll see whether it firms up at the when the market opens. But that's why I'm saying I think right now we're literally in the moment where arbitrageurs are sitting around trying to do the math, and most of them have already done the math, and now just need to set the position.
It's obviously a noisy moment right now. Although, to David's point, the industry is separated into the majors like Chevron, which have return of capital and steadiness, and basically not necessarily looking to grow at all costs. That's their franchise. That's what they've decided. That's how they're going to be in shareholders' minds. And then the other side is, look, we need to buy assets. We need to buy territory. We need to, basically keep growing and replenish. So I think that's basically the two camps that these companies separate out.
It could be good for Chevron and good for Oxy.
No
it doesn't mean it's a win-lose because it's different situations for both companies.